my first question to you is this something which is sustainable across aspects, especially when you have to talk about the overall margins? And two, a marginal dip that we've seen in terms of the operating margins, only if I compare on a sequential basis. So is this due to a seasonal inventory built up ahead of the festive season?
So thank you, Hiral. Very happy and very satisfying performance on Q2, particularly if you look at our subsidiary companies and international performance. CaratLane, Teal, and all international subsidiaries have done exceedingly well. Actually, standalone basis, we grew about 18%, but overall Titan at a group level have grown about 22%. So, which is very, very satisfying performance for us. As far as jewelry margin is concerned, while we have delivered in the 11.1% for domestic business, there is a headwind continuing in terms of gold prices the way they are going up, and they impact margin in multiple manner. While we are trying to pull all possible levers to kind of offset that pressure, but if gold prices continue to go like this, it will be very, very difficult to maintain these margin levels.
Ashok, that's very interesting to hear. And for viewers and investors to understand, hypothetically, every 1 or 2% increase in gold prices, what's the kind of impact that it could have on the margins? If you could just give us a ballpark idea.
So not yet developed a thumb rule for that, because several moving parts in the whole game. The product mix plays a very, very important role between plain jewelry, complex jewelries, diamond jewelry, coin, etc. So that is why, it will be oversimplifying if we say 5% of gold price increase would have 10 basis point or 15 basis point impact on margin. Because we have also not only doing a lot of exchange program, we are also trying to introduce low caratage jewelry and light jewelry, which is 18 carat, 14 carat, and light jewelry. So all of these have a impact in different directions, and our as a management team endeavor is how do we kind of continue to deliver a consistent and stable margin profile for the company.
Okay, Ashok, you mentioned about lower price band gold jewelry. Now, in this quarter itself, the growth in this segment has been sluggish. What is the outlook looking like? And secondly, the studded buyer growth has been marginally higher, even if we exclude the coins. So what is that strategy going to look like from here on?
So for gold buyers, what we are saying, sub 1 lakh price point, where typically middle income group would be buying their gold jewelry, still seems to be sluggish and stressed. It is the high price point where we see the people are still coming out and kind of buying gold jewelry. Studded is a completely, in a way, distinct category with its own strategy, and we are finding with a lot of introduction, even at 1 lakh, 2 lakh price points, and a lot of innovation around solitaire, etc. We are seeing not only in this quarter, for last 4-5 quarters, where buyer growth is better than gold jewelry, other than coin. Coin has its own trajectory at this point of time because of the investment angle associated with that, and it's just unabated going up.
Okay, so would it be right to say that the buyer volume growth for Q2 that has been stronger, and the outlook for H2 is expected to remain strong as well?
So buyer growth in studded has been better than the gold buyer growth. In festive season, we have found the buyer growth better than the first 6 months, I would say, the first 5-6 months of the year, because now the people are getting used to high gold price points. So whoever have been deferring so far, they all kind of fence sitters all jumped in during festive season, and we are seeing that even continuing post Diwali also. Maybe now the wedding season is kicking in, so we continue to see buyer growth improving compared to what we have seen in last 3-4 quarters.
Okay. In terms of the individual segments as well, or the individual brands that you have, where are you seeing growth coming from, and what is going to be the strategy to expand? For example, a CaratLane, if you're talking about Tanishq or Dimas, what are you looking at?
So of course, jewelry, now we had 4 brands: Zoya, Tanishq, Mia, and CaratLane, and now we are adding Damas, hopefully soon the transaction will be closed. And Damas would make us very, very strong in the GCC market and to a new customer target segment, which is the Arab customers. In India, the strategy, along with these four brands covering the widest price points, widest customer segment, would continue. I think Mia and Carrot Lane are doing extremely good job and finding a lot of favor from the customer, around say 1 lakh and sub 1 lakh, even diamond jewelry and some gold jewelry. So the idea is to keep innovating, keep bringing uh, exquisite designs and collections, run the exchange program which we continue to run, but bring periodically offers which will help customer to kind of get over their hesitancy because of the price levels and come and engage with us.
Right. Ashok, interesting commentary I heard in the con call as well when it comes to lab grown diamonds, where the market is growing and is picking up. What is going to be Titan's strategy? And is this going to be for the international market alone, or are you seeing a similar trend for the Indian markets as well?
So I think LGD in Indian market has been gradually finding some interest, and it has not yet become very meaningful. But apart from US, where LGD made a good impact and good percentage of the volume is now in favor of LGD. No other markets have actually shown that trend. When you talk about China or Europe or any other countries that much. India is, I think people are focusing on LGD. And while we are also keeping a very, very keen eye on the development and doing our own experimentation, it looks like they are going to emerge as a distinct categories. On the fashion jewelry side, LGD, and on precious side, natural diamond, with very little overlap or substitution. That's the current reading. Things can change, and we will be ready with our response on that.
Okay. To add to that now, let's look at the watch and wearable segment. Now, the smart category actually has seen a decline. So when are you seeing a turnaround coming in on that front? And analog segment, I think it's premiumization which is playing through, and that's the reason why we've seen a growth of 17%. So what is going to be the strategy? One, to increase the average selling price now of the analog segment, and a turnaround when it comes to smart wearables.
So analog is really doing extremely well. A lot of work has happened in past few years in the area of product innovation, horology, and design, and even in our distribution channels, we are kind of becoming more and more premium. And it is not that only Titan or some international brands are doing well. Even premiumization is happening with Sonata and Fast Track. High price point, much better fashionable watch, and engineered watches are kind of finding a lot of favor. So analog watch growth rate, healthy double-digit growth rate is likely to sustain. A lot of work has happened, continue to happen, and you will see many, many good watches coming out of a stable of Titan. As far as smartwatch is concerned, we are have been talking about that we kind of took a pause in a way to reset our business, and much more differentiated watches in terms of design, in terms of product quality, in terms of consumer engagement. That all work is happening for last 6 7 months, and we are happy that our businesses volume wise may not be showing growth as yet, but margin wise, profit wise, the kind of product now which are coming in the smartwatches space from our stable are far more distinct and better.
Interesting. Ashok, international and emerging markets. I mean, the 86% growth in the international business, mainly led by USA doubling and a strong GCC growth that has come in. So, and if you have to look at the Damas acquisition as well, how is that growth expected to look like? What is going to be the path for break-even as well when you talk about the emerging businesses? I mean, Teneria, I know the losses have reduced, but EBITDA break-even is what the street is watching out for. And if you talk about Earth, what's going to be the strategy there? So in cumulation, the overall picture.
So international business is likely to grow very well. We began 4 years back, into 5 years back, 2020 October, and we are finding huge amount of traction and love from the Indian diaspora elsewhere. With Damas now, we are kind of getting into adjacency in terms of geographical adjacency, I would say, and Arab customer segment also. And there is a huge synergy on the back end between Tanishq and Damas as far as the sourcing, supply, gold, bullion, all those things, and which our endeavor would be kind of how do we capture as we go ahead. So international business has become at operating level profitable, and it is likely to further consolidate and strengthen its profitability. Growth, we still believe they would be, excess of 30-40% for few more years before they start becoming mature and start getting into the regular growth cycle. Emerging business, yes, there are three businesses actually. The perfume business is doing very well and profitable with good margin. It is Tanera and the women's bag, which is a late entrant in the sense 2-3 years back we started doing ramping up that business. They are still not making money. I would expect it will take at least 2 more years before these two sub segments become profitable.
Okay, that